My position here is not Bitcoin will not be global money. It's not Bitcoin isn't valuable. It's not Bitcoin is a scam. It's not the government will ban Bitcoin. It's none of these things. So getting back to this chart, which is really cool. We got M2 money supply. We've got consumer price index CPI versus GDP. Now this is nominal GDP. So if you look at this is going back to 1867 to 1899. And what's really cool is you can just see the cumulative percentage increase or decrease. So we go from this basically 30-year period where you can see M2 money supply went up by 400%, almost 400%. But during that same time frame, we had 45% deflation. And what's even more staggering and more incredible is that we had 117% nominal GDP growth. So if you actually do the math, the real GDP growth would be closer to 300%. And so if we were to assume that if you increase the money supply by 1 unit, you will get, even if it's base layer, you will get an additional unit of inflation. We can see that is not true. That is, at least during this time frame. Now, maybe it would be true in the future, but we can show that there's been periods in U.S. history where that is unequivocally false. And therefore, there isn't as much, it's not a 100% certainty here. Now, the argument is going to be, well, George, if we would have created less money, so let's just say there would have been a 300% increase in money supply, you would have seen even more deflation and even more benefits that would have been accrued by society at large. Okay. For that, let's just go ahead and go to 1930.
That's a brilliant chart. Like, that's really cool.
Great, isn't it?
Yeah.
It is great.
Let's
look at M2 money supply right here. It grew by same thing, almost 400%. In fact, it grew less than it did before. But instead of 50% deflation, we had 74% inflation. So less money supply growth, but yet far, far, far more inflation. So I don't think you can argue definitively. Obviously, there's times in history where you could argue this, but you can't say that if we move into a Bitcoin standard, that even if we keep money fixed, that this will never, ever, ever, even if you don't have fractional reserve banking, even if you had a full reserve, I don't think you can argue definitively that we would see consumer price deflation. Because what you do, and when you go to the 1960s and then you go to today's date, what you'll see is that there isn't a real good correlation between the money supply increase and actual increase in consumer prices. So this leads you to the question of what is it? If it's not this monetarist view, then what is creating this inflation that we all agree is so insidious? What are your thoughts?
So firstly, that's a brilliant chart. I think maybe the reason you saw such massive deflation in the 1800s while seeing an inflating money supply, if I had to guess, like, I'm not sure, if I had to guess, maybe the reason for that was because in these late 1700s and 1800s, we're coming off the Industrial Revolution, the invention of railways, the steam engine, electricity, steel. And maybe we saw massive population growth in America. So maybe that required a large money supply growth. Again, I'm not sure. But I think technology plays a very, very large role. So that's my first kind of knee-jerk reaction to it. I've obviously never seen that chart, so I'd love to. I'm going to sit down and stew on that chart when I get off this call because I think it's brilliant. But I think once you kind of once the globes globally connected. Like in the 1800s, again, we were picking all of the low-hanging fruit in terms of technological innovations. And even into like the 1950s and 60s and 70s, we were still kind of picking low-hanging fruit. Are you guys familiar with the thesis, The Great Stagnation by Peter Cohen?
No.
Peter Thiel talks about this thing called the Great Stagnation. He asked the question, why has our physical world pretty much stagnated since 1970? Because he says, if you look back 250 years from the Industrial Revolution, we've literally gone from living in farms to today living in megacities. So we've had the Industrial Revolution, the invention of railways, steam engines. We're utilizing coal as an energy source. We upgraded to oil as an energy source. We had the invention of automobiles. But then kind of since 1950, 1960, 1970, everything in the physical world has stagnated. So the max speed of airplanes has stagnated since 1970. There's another brilliant curve. It's called the Henry Adams curve. And it's articulating a similar thing. It tracks the amount of energy usage per capita that we've used as a civilization since the 1700s. And we've actually used an exponentially increasing amount of energy since the 1700s, all the way until 1960, 1970. And then again, we stagnated. So Peter Thiel and Peter Cohen, who wrote the book, The Great Stagnation, they're kind of like, what's causing the stagnation in our physical world over the past 50 years? But
Luke, if that's true, what you're saying, that we've already picked the low-lying fruit, then how does Bitcoin fix that?
So I don't think Bitcoin fixes anything directly. Like I think...
like how would a fixed money supply take us back to the late 1800s?
So I think firstly, it will decrease the size of government. It's going to be a multi-decade process, but one of the reasons that Peter Thiel and Peter Cohen talk about for the stagnation is they say potentially it could be increased government regulation. So the Department of Energy was created in 1970 something as we started using less energy. So Bitcoin and Bitcoin mining actually incentivizes the build out of renewable energy, and it also incentivizes the usage of more energy as as it can be used to capture wasted energy like flared gas and obviously hydropower, excess, all of these wasted energy sources. Even in Guatemala, people are mining Bitcoin with used cooking oils. And in Mexico, they're mining Bitcoin with wasted pig shit. So I think Bitcoin incentivizes the usage of more energy. And I hope it puts us back onto an increasing trend of energy usage. Because like obviously we both agree ESG is dehuman, and it's Klaus Schwab's wet dream for the world where we all use less energy. I think that's anti-human.
Yeah.
So I think that's one. I think there's two ways. Bitcoin incentivizes smaller government, so less regulations, lets the free market and the capitalists actually go out there and do what they should be doing, innovating for society without being taxed 30 or 40%. So that's the first thing, less government. And the second thing is more energy usage. Okay.
So we might, because the low-lying fruit was back in the late 1800s, we might not get to that level, but we would get to a level where it's far better than it is today. Now, this is interesting because let me go ahead and go through the rest of this chart, and I think it's going to dovetail very well on what your views are, and I think it's going to give you a lot of food for thought. So let's go from the 1930s here, where we can see that they're really, if it's just about money supply, then you're wrong. You're wrong. And I'm not saying you, but whomever, right? There's got to be something else going on here, or else you would see, if it was just money supply, you would see the inflation rate be right back down near 50%. So if we keep going, we go 1960 to, let's say, 91 roughly, we can see again 1,000% money growth, but we've got an inflation rate now of 359%. Again, that delta between the two is significantly different than the two time frames you saw before. So leading us to the conclusion that maybe there's not this one-to-one relationship, and maybe there's something else that has a bigger impact on consumer price deflation. Now we go to today, and then you can see a dramatic increase, especially the last couple of years, of M2 money supply. But then you do see this 120% inflation, where just going back to that 1800s example, we're right about 400%, but yet we were at 50% deflation. So we might have a similar delta there, but it just is really fluctuated as we go through all of these decades. Now, what I think you'll find very fascinating is if we also look at real GDP growth, because right here we got nominal. And when you look at nominal, can't really come. Yeah.
George, which GDP includes government spending in it?
Well, all GDP.
Okay.
All GDP. So but you're thinking the right way here, in my opinion. And so right here we've got 100% nominal GDP growth with, call it, 45% deflation. So I did the math here, and that gives us a real GDP of 300%. So assuming that this is a decent proxy as far as how well the economy is doing, we've got 300% growth in the economy between this, call it the end of the 1860s and 1900. Okay, now we move on to that same time frame, 1930 to, call it 1960 or so, or maybe 1929, 1960. And this is when, if you remember, we had the lower monetary growth, but much, much, much higher inflation. And you see that nominal GDP was around 400%. So if you do the math here, now all of a sudden, the real GDP growth, 200%. So we've gone from 300 down to 200. Now, go ahead.
No, I was just going to say that was when the governments were deleveraging themselves in the 1940s, during World War II and after World War II.
To a certain degree, but on net balance, they were increasing dramatically. So here we go to, I'll just give you the punchline. At this time frame, were the real GDP growth 136%. So we've gone from 300, 200, 136. And then we go to the last time segment, which is 1991 to today's date, roughly. And we're all the way down to 94%. So going back to your point that you kind of brilliantly came to, maybe just inadvertently, is when you look at real GDP growth, it's tough to find correlation between the money supply, deflation, any of these things. But one thing that you see an exact correlation to is government spending as a percentage of GDP. During this time frame, when it's down here under 10%, this is when you're seeing this 300% growth.
So what time frame is that? Sorry, George.
Roughly 1870 to 1900.
Okay, so you had smaller government in those 30 years, and
Way smaller.
And that was when we saw the massive deflation with increasing money supply and increasing GDP.
Correct.
Interesting.
And then we go to 1930 to 1960, where we can see right here, you have a massive growth of government when you look at the spending as a percentage of GDP. Massive. Now, you said that in the 40s, we had the big spending increase due to the World War, and we came back down. Correct. But look where we came back down to. A much higher level than we were prior to the war. And this included the 1930s depression, when FDR was spending money like a drunken sailor. And this goes up to a point in 1960 where federal is now at 30% of GDP, federal spending. Then we go to the next time sequence where we go from, remember, 300%, 200%. Now we go down to 136%. And we can see what happened to government spending. It went up again. And then we go from 90, this point right here. And keep in mind, this chart only goes to 2018. If this chart continued, it would go like this. And then right here, it would go parabolic. and it would go back up to a level almost where we were in the 1940s, yet not in wartime, where we are today. Let's just call it 50% government spending as a percentage of GDP. So you see a net increase, just like we've seen all these other timeframes. And just as we had a net increase in government spending as a percentage of GDP, we saw a net decrease in real GDP growth. So my point is there's a far lower probability, or the amount of revenue, the amount of government spending is far more of an unknown than the fact that the base layer of Bitcoin cannot exceed 21 million. And if you're trying to predict deflation, you can't really do so accurately by just looking at money supply. You have to more so put your priority or your emphasis on government spending as a percentage of GDP. And that's far more of an unknown. So now I'm not saying that you wouldn't have less government spending. Maybe you would, but maybe you wouldn't. It's far less certain than just saying there's 21 million Bitcoin. Not to say don't buy Bitcoin, but to say make sure that you're buying it for the right reasons and you got your focus on the right thing. You're focused on money supply, money supply, money supply, money supply. And maybe your focus should be more on how Bitcoin can reduce government spending as a percentage of GDP.
So there you have it. That is my short and sharp little chat with George Gammon. If you enjoyed that one, you're going to love the full 1 hour conversation that is posted over on the Money Matters YouTube channel, which is powered by CoinBeast. Highly recommend you check that puppy out. That's where I'm posting all of my regular and more recent interviews and content from now on. So check me out over there and let me know in the comments down below what you thought of this interview with George. Does increases in the money supply cause CPI inflation or not? Let me know your thoughts in the comments down below. And before we round this thing out, I want to quickly thank today's show's sponsors. If you're a high net worth individual looking to buy more than $10,000 of Bitcoin, I would love to point you towards my newest YouTube show sponsor, who of course is Bitcoin Reserve. They're a great Bitcoin only company and they're going to help you buy Bitcoin with the lowest fees, fastest settlement, and do it all in a privacy preserving way. BitBox02 Hardware Wallet, the easiest hardware wallet there is in the space. Amber, guys, they're giving you $10 of free Bitcoin if you sign up using the Amber exchange. Super easy to use. We just rolled out 62 countries. Get around it. Great Bitcoin only company again. And of course, final show sponsor, Hodling Apparel, the best Bitcoin clothing brand there is in the space. Highly recommend you check them out and check out the videos they're making, because they're traveling to El Salvador, Guatemala, all of these Bitcoin hotspots, and they've got some really great videos they're putting out on their Instagram and their Twitter. So with all that said, hope you guys have a good day, and I'll see you all in the next video.